Hi there, welcome to Kneppy Invest, and welcome to another answer and reply video. I have quite a few of your questions and your comments to get through, and I do plan to go through every single thing you have written in the comment section of my videos. However, if I get significantly more subscribers and significantly more comments, I think this task will be almost an impossibility. So let's hope that does not happen. Although if it does happen, I'd be okay with that as well. So let's go back all the way to 3 weeks ago. Hutcho2357 says, and this is not a question, I called Karma Company a couple of months ago because I did feature this company in a video because share price ran up a lot in one day after seeing Kava consumption taking off in the US. So Kava is associated with Fiji, and I know that because I've actually worked with some Fijians in the past, and they do like their Kava. However, I've never tried Kava, and Hacho says it's taken off in the US. If you take the powder, it's a similar feeling to being stoned, which is interesting. And there's a lot of benefits of marijuana, and obviously there's medicinal benefits for Kava because Hacho's partner uses along with CBD oil for pain management as a fibromyalgia sufferer. Okay, so let's have a look at Karma Company or Karma Corporation. I forget what it's called. COO. I could be completely wrong. CCO. CCO. Karma Company International. And there it is. There is the share price popping up on the 5th of June, which means I'm 24 days behind. And the share price on that day rose 136.4%, went to a high of 2 cents, finished the day at 1.3 cents. There was a little bit of excitement around this company because of this particular day in a few of Facebook investing, maybe it was more trading forums. Someone thought it was about to take off, but it hasn't, and it's fallen down back to 0.8 cents. And I'm much less interested in companies whose share price is below 1 cent. So no interest in Karma Company right now. However, if you do look at the volume since February, we have seen a stark increase in volume since then compared to the previous 6 months. Look at the volume between August and February. There was very little, but volume has started to increase. And again, the big spike was on the 5th of June. So at this point in time, I'm not a lot of interest for me in this company because where the share price is. However, the chart is starting to look a little bit more interesting, particularly when you look at the volume. So thank you, Hacho, for your comment. And the whole point of me doing this channel is to share ideas with you. And some of you share ideas with not only me, but everyone else as well. So share your ideas with me and I'll talk about it. Anderson has written, should I say Anderson6379, our South African friend, says, I'm a global treasure. Well, I wish I was worth a global treasure. Thanks for the Palladium update. Always like to do the Palladium update just for you. I'll give a thumbs up. And Anderson says, that was the best explanation of the inverse yield and price relationship of bonds that I have heard. I don't know about that. It is a bit of a tricky thing to get your head around, I would imagine, because it is sort of weird that there is an inverse relationship between bond yields and bond prices, and the very fact that interest rates have fallen, bond yields have fallen over the past 40 years, up until the last few years, and yet that was considered a bull market, but bond yields are falling. Doesn't make sense. Anyway, it does make sense if you think about it. If you do think about it. Infinity says coal stocks took a pounding today. Brutal. I am going to have to trust you because this was 3 weeks ago. And yes, so that's sometimes that what happens when it comes to commodities. Jeff Daly says, no, it's in the first discovery wave. I would wait for the orphan phase to occur. I thought I talked about this. I've definitely talked about the Lassonde curve. And I think Jeff, if I remember the name, I always forget names. Jeff Daly, I think he was talking about, was it Southern SXG? So this is the Lassonde curve. I just want to get an image up. I don't care where it's from because they should be all the same. Image. Which one? This one. Can I just make it bigger? Yeah, so for Southern Cross, I'm going to say Southern Cross Electrical Engineering, but Southern Cross Gold, uh, and Jeff J says, it's in the first discovery wave. I would wait for the orphan phase to continue. So the first discovery phase would be somewhere in here. Recon drilling, exploration drilling, discovery dollars. So somewhere that does make sense. And then we get to the orphan period, share price should drop, and then you get to minus construction, and share price should rise. So if you have a look at Southern Cross Gold, the share price is in that stage of rising. So that is in that discovery phase. Yeah, first discovery wave. I would wait for the orphan phase to occur. Yeah, I have never used the Lassonde curve to buy companies, but I'm assuming it can be useful. I'm assuming that. I've just got that open just so I can copy and paste anyone who asks me about my trading setup. Anyway, so thank you, Jeff Daly. Stuart Percival says, my opinion is it's too early for hydrogen. Everyone has an opinion. Your opinion could be wrong. Your opinion could be right. I always am skeptical of my own opinions for right or wrong reasons. And I think one of the reasons behind that is in my day-to-day job forecasting the weather, you need a bit of humility because you're going to be wrong a lot, because to model the weather is an imperfect science, because to perfectly model the weather is an almost impossibility. So at times we will get the weather wrong. We get the weather right a lot, but sometimes we'll get the weather wrong. And some people just can't handle that. Some very smart people can't handle that sometimes they're going to be wrong when they're forecasting the weather. So you need a bit of humility. And that really rubs off on me when I think about the future, what might happen in the future. And a lot of my thoughts, a lot of my opinions, I know they could be wrong. So you do need a bit of humility when it comes to opinions. And unfortunately, a lot of people have opinions and they stick to it. No matter what they hear, what they've been told, they could be told they're completely wrong, yet they stick to their opinions because I think it's some sort of they think it's an attack on their belief system. I don't know why people stick strong to beliefs that are proven to be completely wrong. I mean, flat Earths, people believe in flat Earth. I just don't understand. Climate change is another one. It's definitively been proved that the climate is changing through anthropogenic reasons. It's been proven, and still people are sticking to the fact that no, it's not. It's not changing because of us. It's changing for other reasons. I've heard this time and time again. Climate always changes. That's what's happening now. Now, if we're going through a normal cycle, we should be in a cooling phase right now. That's why in the 70s, most of the scientists, climate scientists, said we're going to be in a cooling phase. We should be in a cooling phase right now based off all the other factors. But they didn't take into account humanity and our effect on this planet, and we're having a significant effect. People still just won't believe it. They won't believe it. You show them everything, won't believe it. So if someone does have a strong opinion on something, I don't try to change their opinion. It's up to them to change their opinion. You can't change their opinion. And that's true for most people, but there are some people out there who are open-minded, and I try to be open-minded. So if I'm wrong, I will try to admit it. And I have I have seen some comments here where I went, I could be wrong about this. I could be wrong. I know. Too early for hydrogen. Who knows? I don't know. I was actually looking at the company, and funny enough, talking about the Greens will not accept brown or dirty hydrogen. I was looking at a company called, is it Hyterra? The reason I was looking at this company was one simple reason, the chart. Hyterra. So it's been popping up on my radar. And you can see, well, you just have to zoom in a little bit. This is the daily chart. And why has it been popping on my radar? Two reasons. Good share price action, look at the volume. So this has only been through or during the last 2 months. So it hasn't been long for this company. So I thought, what does this company do? No idea. So what I always like to do, they had a price query. So ASX is saying, wait, what's happening in the share price? Why is it going up? And the first thing I did would be I always like to look at the most recent presentation. sometimes you have to dig a little bit deep. And here is an investor presentation released on the 28th of March. Funny enough, just before they did a capital raising, looks like, or during the phase of the capital raising. Anyway, you could also look at the annual report, which was released a few days before that. But let's have a look at that investor presentation. I have a feeling this is the company I was thinking about. I was looking at a few companies the other day, and they all seem to meld together. So sometimes I can be wrong. No, this is the company I was thinking of. White hydrogen. So I know nothing about hydrogen. I know nothing about white hydrogen, brown hydrogen, green hydrogen, yellow hydrogen, which is found in sewers. Anyway, exploring the natural hydrogen in helium in the United States. So yeah, upcoming drilling campaign on the Nemaha Ridge, Kansas, USA. Still don't know what white hydrogen is. Here it is. White hydrogen made by nature, cleaner, greener, and cheaper to produce using conventional oil and gas techniques. White hydrogen could, that's the appropriate word here, could revolutionize industry and economies worldwide. I have no idea. No idea if hydrogen will have anything to say when it comes to revolutionizing industry and economies worldwide. It may, but it may not. I have no idea. They keep saying that lithium's everywhere. You would assume hydrogen's everywhere in the universe too. Would it be the most abundant element in the universe? What is the most abundant? Anyway, so go through this presentation. By the way, it's a nice presentation from the company. The company is not valued that much. Was it 30 million? I think 20 to 30 million. 33 million. Most abundant. I'm the most abundant element has to be hydrogen in the universe. Has to be. Yeah, there we go. That's just has to be, doesn't it? It just has to be. It's no. Anyway. Yeah, so thank you, Stuart Percival. You could be right. You could be wrong. But the most important thing is, if wrong, the ability to change and understand that you are wrong, because you could hold on to your wrong opinion and be worse for it and miss an opportunity. So thank you, Stuart Percival. Animal Spirit says, Kneppy, you mentioned in one of your earlier videos that EV to operating cash flow is a key metric for outperformance. Are you able to explain that in a little bit more detail for newbie? What is a good range for that metric? And does that vary between sectors? Yes. Thank you, and keep up the good work. Your videos have made a huge difference in educating a newbie like me about the stock market and investing in general. So I've done a lot of reading in the past 15 years. And and not only reading like books, but also reading papers, like peer-reviewed papers. And some of the metrics they have studied include EV to operating cash flow. Pretty sure EV to free cash flow yield is another one, good one. EV to EBIT. So all these have been popping up or have popped up on my radar because of some research that have been done. So EV to operating cash flow. So why is or would this be a key metric? And then I'll go talk about the good range, and definitely varies between sectors. So tech sector, where you would see a much higher EV to operating cash flow. So why EV? Enterprise value. Why not just price or market cap? Well, I like to include debt and also like to include cash. So EV, I think, is a better indicator than markup. For instance, there are companies right now listed on the ASX who have more debt than the market cap of the company. And that's quite important for those companies. You have to take that into account. What is a company out there that has way more? There's a company called IMB, Intelligent Monitoring Group. What's the market cap of this company now? 129.8 million. It might have market cap more than the debt. Debt to equity says 1,765.7. So that's probably a way to look at it. Debt to equity is another one. But yeah, I do look at debt and cash, and that way, because I do look at that a lot, enterprise value is a much better indicator of the true value of the company because it takes into account debt and cash. So EV is important. Now, operating cash flow. So you probably know price to earnings. So price is the market cap. right? So it's sort of the same thing. Price versus or market cap versus enterprise value. So again, price to earnings. So the what do you call it, denominator? Forget which one's which. So price is the same as market cap. So if you take away the per share, because that's price per share, and the earnings is earnings per share. If you take away the price or the share bit, all you've got is markup over profit. So you can see the relationship between markup versus profit or over profit, which is the PE ratio versus EV to operating cash flow. It's a similar metric, but you're just looking at different things. EV or enterprise value versus markup, so we take into account debt and cash, versus earnings or profit versus operating cash flow. Now, if you look at say the profit, or they say the profit loss statement, the cash flow statement. If you go down the profit and loss statement, the further you go down any of the statements, the more likelihood there's going to be manipulation and legal manipulation of the numbers. So sometimes you will see profit jump up or down quite a bit. It's natural for some companies to see the profit go up and down because you might have one-offs, that sort of thing. Some companies re-rate or revalue their property, and you see a massive increase in profit one year. So you have to take that into account if you're using earnings or earnings per share, and operating cash flow is found at the top of the cash flow statement. Not the absolute top, that's cash receipts. So the further up you are in any of the balance sheets, or not the balance sheet, or any of the financial statements, the less likely it is to be manipulated. So the further you go down in the cash flow statement to free cash flow, and free cash flow is not even mentioned in the balance sheet, it's a little bit more likely to be manipulated. So I do prefer operating cash flow, free cash flow over earnings. But then even if you use operating cash flow, free cash flow, you have to understand that those numbers can also be quite volatile depending on changes in working capital. So one of the other metrics some people use is EV to EBIT. EV to EBIT is, I'm pretty sure, was popular with, what's his name? The green EV, or the EV EBITDA. That's another one, but I'm pretty sure EV to EBIT was used by Green Blast. What was his name? Not Green was, or what was his name? Green Blast. I want to say Blast. Greenblatt? Is it Greenblatt? Joel Greenblatt. That's it. He was EBIT to EV, so it's the same thing. You just switch it around as a substitute for earnings yield to compare. So he's talking about yield. EBIT to EV is a yield. So have a read of his book. What was his book called? Joel Green. It was a fairly popular book, and he was the one who came up with EV to EBIT. I've got to Google this one. What book did he write? The book, the little book that beats the market. What is Joel Greenblatt's magic formula? Yeah. So EBIT to enterprise value, but it's exactly the same as enterprise value to EBIT. Another one who loves EV to EBIT is Tobias Carlisle. EBIT to EBIT. I'm pretty sure he uses EV to EBIT. A deep value by Tobias Carlisle, earnings yield, EBIT TV. So it's they're usually using yield. So it's the same thing. Anyway, so that's another one is EV to EBIT or EBIT to EV, just flipping around using a yield instead of a number. And what is a good range for that metric? It depends. Funny enough, it depends. So one of my favorite metrics was EV to free cash flow. And I was looking for companies that had an EV to free cash flow between about 6 and 10. And if it was above 10, maybe a little expensive. If it was below 6, maybe cheap. But it always depends on the company. And that also includes the sector. So yeah, a lot to learn when it comes to this. But definitely EV to operating cash flow is one of my favorite valuation metrics. It's not the only one I use, by the way. Also use PE ratio, price to book ratio. It's a whole plethora of ones you can use. EV to EBIT, you can use that as well. And of course, if you reverse, which one you use on top, you get a yield instead of a number. Which is why free cash flow yield, which would be free cash flow over price or market cap. All right, and so thank you, Animal Spirit. Hopefully I explained that well. If I haven't, if you want more explanation, I'll do a standalone video on that, maybe. Hi, Kneppy, can you please share why you re-entered integrated research again? How did you read their P/E ratio based on half-year financial results? Thanks. I have no idea about the P/E ratio, and it wasn't based off any of the financial results. Well, it was based off it's not exactly true. Let's have a look at the chart for integrated research. And I'll show you exactly where I bought. Here I bought. So I bought right here at 37.5 cents. I thought this was a turnaround story, a possible turnaround story, fairly similar to a few other turnaround stories I've been successful with in the past, including Gentrack and MMA Offshore. And I was bought here on a potential breakout. Now, this was on the 4th of March, 37.5 cents. Share price went sideways for 2 months. 2 months, yes, I was waiting. So I probably didn't time it to the best, but I just saw some good signs, and I'm pretty sure they would have released the half-year results. So there was a nice little positive reaction from the market upon release of the results, but it wasn't massively positive. But it was positive enough for me to get interested in this company. Now, I can't remember the results at all, but then the company released something really important on the 9th of May, and I actually added to my position on that date. The 9th of May I'm pretty sure this was a profit upgrade, because it was a really positive reaction from the market. 9th of May, yeah, trading update. So the most powerful type of announcement a company can release is a profit upgrade. That's what they did. And this was an indication that things are turning around for this company. And it's not an absolute, but an indication that things are turning around. That's all I did to re-enter integrate. It wasn't necessarily based off any of their financial numbers. It was just looking at the chart, seeing things are turning around, and then they released their profit upgrade, and then I added to my position. So I've taken 2 positions with integrated research on the back of different reasons, or 4 different reasons. The first one was just the chart. Really nice little chart. Well, both were because of the chart. When you see this sort of reaction, I do get excited. And yeah, so hopefully that has helped. We can have a look at let's have a look at actually, let's go to FinChat. See what FinChat says when we talk about their results. So integrated research. So you can look at half-year results, or it also has trailing 12 months. So LTM is last 12 months. So revenue for integrated research up to 72.2 million, and net income is negative. And one of the reasons it's probably negative is because 1.5 years was negative. Yeah. So let's have a look at, this is the half year information. So income, yeah, so they had a loss of 32.4 million in the half year. So this would be the second half of last year. And this particular half year, a profit of $11.2 million. Yeah, so it doesn't mean, yeah, so this is a really good reason why just looking at earnings and profit is not necessarily a good thing, because they went from a massive loss to a pretty big profit. But that profit, 11.2 million, might be probably higher than it should be, because that means the earnings per share of the company is probably fairly high. And then if you have a look at the cash flow statement, let's have a look at operating activities. Oh, we read that right now. Cash flow from operations, $3.4 million in this half year. Previous half year, they actually had more cash flow from operations. Anyway, so it's an integrated, it's a complex web of, I was going to say something else there. Complex web, looking at financial statements and understanding a company. And that actually does probably is, makes technical analysis easier to get your head around, because you don't have to understand much. And actually, this was really interesting, because yesterday, was it today or today? I was listening to, it would have been today. I was listening to a podcast with Andrew Page and Scott Phillips. And Andrew Page was talking about why he's not on Ausbiz the Core that much anymore, and it's because he's uncertain. He can't give a buy or sell for some companies because they give the companies ahead of time, but spending an hour on a company is just not enough because I can't tell if a company is a buy or sell after an hour. And I was just thinking about that. I can tell just by looking at a chart whether a company is a buy or sell. So right now, integrated research is much more a buy than a sell. So just give me a random ticker code. I can tell you straight away if a company is a buy or sell. So let's have a look at a random ticker code. Let's go to, here we go, RDY, ReadyTech. Is this a buy? No. 1 second. So, but for those fundamental analysis people, they would have to spend a fair bit of time trying to understand the financial statements, the potential future of this company, management, blah, 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 moats, that sort of thing, to get to the point where they can say it's a buy or sell. But using technical analysis, you can say whether a company is a buy or sell in 1 second. And ReadyTech is not a buy at all right now. And I think I went on a bit of a tangent. So P ratio. Wonder what FinChat says the P ratio is negative because 1/2 ago they had a loss. Yeah. So if you're just looking at it, if you're just looking at financial information for integrated research, you would not be buying this company yet. It's just way too soon. So the chart technical analysis can lead you to make decisions much or way before fundamentalists. It's another positive about technical analysis. I hope that all makes sense. Hope I'm being clear. By the way, I worked last night, so that could be a reason why I'm sounding unclear. Oh, so we're getting to June 14. Happy birthday. Thank you. Great review as usual. Thank you. Nice. I like how you remind viewers that the videos are made to share ideas. Oh, yes, I've already said that today. I will share one with your viewers today regarding LTP. Is that LTP the T code, or is it the pharmaceutical company? No, it must be the company is the ticker code LTP, but the company name is LTR. Okay, so this is the chart. I actually did mention it maybe once or twice because the chart does look good. Hasn't been long on the ASX for less than a year, looks like, but there has been a bit of a run up. I can't tell you what this company does, but Monogram is sharing some of his thoughts or maybe some facts around this company. Okay, so he's sharing one of his ideas with the viewers today regarding LTR Pharma. Similar spray is already available in market. The study was conducted on 18 to 45-year-old males, healthy males. The condition is predominantly in older men with other medical problems. The study shows no significant difference between the oral and nasal treatment in achieving desired concentration. Market may love it, but from medical point of view, the announcement is inaccurate. No, I pronounced that wrong. Inadequate. Thank you, Monogram. That is the sort of information I love because I wouldn't be even able to tell you what this company does. Obviously, you gave us some information there, and the market does like it. Spontan, was that it? Spontan achieves positive clinical results. So this is some sort of spray was this like a Viagra sort of thing? They should have a about section. Oh yeah, that's right. Erectile dysfunction. Yeah, innovative nasal spray treatment for ED. Yep, I will never need that. Thank you, Monogram. That's great. Great information there. Okay, Jason Whiteley says, with inflow of GQG, company I'm trading right now, it will be rolling 12 months figures, not like for like, so will be only indicative as one group of figures will have March inflow. Lynch also likes its price for recession. I think it looks great value at the moment. So I'm trading this, and that's all I'm going to say. GQG, my favorite ticker code, actually probably my least favorite ticker code because I get it confused. I don't know why. I always want to say QGQ, but GQG just doesn't roll off the tongue. So there's me buying a little bit later than I probably should have. So I did break out, and these are sort of situations or setups I want to buy a little bit earlier. And someone actually did mention looking at the 50, or no, it was a 5 to 20 cross. And I'm feeling it should be 50 to 200 cross because I have been looking at the 50 to 200 cross, and that sort of does make sense. Okay, so yeah, this is just a really good looking chart. That's all I can say about GQG, and that's all I wouldn't say that's all I know about the company, but that's all I need to know about this company right now because I am just trading GQG. And they release their funds under management every single month, and it's looking really great. So that's all I need to know at this point in time. But thank you for that information, Jason Whiteley. Anderson says, thanks to all those asked questions, this segment is becoming a cannot miss. Thank you, Anderson. Your comments always appreciated. David Giblet would love to hear your thoughts on Laserbond. So I was a shareholder of Laserbond, and one of the things I'm doing now is I want to combine my small cap portfolio and my trading portfolio. And the only companies I want to own for the longer term are the high quality companies. Keep that. Don't have to look at that portfolio, but I want to trade the smaller caps a little bit more. And one of the reasons behind that is some of my worst performing companies are small cap companies, and I should have kicked them clear of my portfolio well long ago. I'm looking at you, Pointera. But I just kept holding them because I like the potential. But small cap companies have the potential to absolutely take off. And I've held those companies, but they also have the potential to fail. And one of the things I want to do is get rid of those failing small cap companies and maintain a holding on the best performing ones. And I think I can really amplify my returns. So one of the reasons I decided to just sell Laserbond is just because of the chart. And there was some negativity around, forget the whole story about was it the founder who doesn't think the management is doing a good job. He wants control again or something like that. I'm sure someone will be able to clarify that. But yeah, it's just a chart. And also, when they released their results in February, share price dove 13.8%. That's not a good sign. So on this little rally we saw back in April, I took profits. And yeah, it was a small amount of profits, but it was enough for me to take profits. And the chart just does nothing for me. Not only that, if you look at the long-term chart, just going sideways. So over the past 4 years, share price is going sideways. So I'm waiting for a breakout. So this is where I'm just got this company on the sideline and I'm just waiting for a breakout. It could happen any moment. Well, maybe not yet because there's still a little bit of negative sentiment. Other than that, when it comes to financials, hasn't seen a lot of growth recently. So if you just look at the FinChat numbers, and I'm assuming all these numbers are accurate. So if you do go to income statement. So one of the things I do look at is revenue growth. Now revenue is growing, but you can see started to peter out. So that is a slight concern. The other thing I look at is gross margins. So I want to see gross margins. Well, they haven't got gross margins here. If you look at, I don't know why, because they've got gross profit. So if you have a look at gross profit there. So I think gross margins might be increasing, but I just want to see a little bit more increase in profit. Just seems like the company is starting to, it could be just a short-term thing. It's just starting to lose its growth that it had seen over the previous about 5 years. Actually, let's have a look. That's half year. Let's have a look at the annual numbers. Yeah. So it's had really good growth over the last 5 or even longer. And I just want to see some proof that is continuing. I think even the market wants to see that as well. Anyway, I think that does have potential. By the way, Laserbond does have potential. That's one of the reasons why I'm still looking at it. And if I do see it break out, I will take advantage, hopefully. Hutcho says the economy is in the, can't swear, toilet. I'm a builder and my suppliers are now calling me following up quotes. Trades that were almost untenable 6 months ago are now messaging me for work, or tradies. Tradies that were almost unattainable 6 months ago are now messaging me for work. Cost of living is hitting hard. And even though rich are smashing it with 5% bank interest returns, that's getting gobbled up thanks to goods and services taking the piss. Settling, folks, this is going to be some roller coaster. And someone asked, are you in New South Wales or Victoria? What can I say about that comment from Hutcho? there is a disconnect between those in power and what's happening in the economy. What's her name? Janet Yellen. She said something the other day which shows me, yeah, there's disconnect. They just don't understand what's actually happening in the economy. And people without debt are doing fine. I'm without debt, I'm doing fine. And that's unfortunate for those people who are highly in debt because they're not doing as well. And the reason why this is happening is because reserve banks, the central banks around the world, lowered interest rates way too much. And the people got used to low interest rates, and people thought interest rates were going to stay low forever. So they got too much debt. They got too leveraged up, and that is the reason we are hurting as an economy. And I think we're going to continue to hurt as an economy for a while. And even the notion of stagflation should not be dismissed. And stagflation would be the worst case scenario moving forward. And I think I've mentioned this before. When I first took a mortgage 13 years ago, 13 to 40, interest rates were about where they are right now. In fact, they could have been higher. And no one cared. That was life back then. That sort of interest rates were quite normal. In fact, I'm pretty sure they lifted interest rates for a while and then they started lowering interest rates. So when interest rates are low, there is a weapon that the reserve banks, central banks can't use when times are tough. Right now, I think should be a time when they should be lowering interest rates or thinking about lowering interest rates. But inflation is sticky, so they can't really do that, can they? Because they want inflation down to a certain level. So interesting times, because in an ideal world, inflation would be very low, so they could actually decrease interest rates. But if we do see inflation a little bit more stickier, then if interest rates rise, I think the chances are of us going to recession is infinitely greater than now. And I think if they do raise interest rates, it will be a mistake. That's just my opinion. And my opinion can be wrong, by the way. Anderson says, nice bonus, 20 plus stocks. I found lots of value in the insights, thanks. Plus, I recently went into Karoon. I'm a sucker for value trap. The valuation looked too scrumptious for me to ignore. I probably would agree with you. So I have been following Karoon, and it has a nice little bounce. So this little purple area would be a support area. Fell through the support area, but has bounced back above it. So that's a good sign. And I have noticed oil has been on a nice little rally, if I remember correctly. Let's go back to oil. Oil's had a nice little rally. And Karoon hasn't had as much of a rally. So I do think, if I had to guess, I reckon buying at these levels in the long term you will see some pretty good returns if you bought at these levels. I could be wrong though. It's a mining company and an energy company, and I am trying to limit my exposure and be way more picky when it comes to mining companies and trading. I'll definitely not own a mining company for the long term. Maybe if I was forced to BHP, but this would just be a trade. At this point in time, I would not trade Karoon. That's just me again. KBC has taken over Yowie. Does that mean Yowie will delist? Correct. Well, if they take it completely over, yes. Well, because it's been taken over. Yeah, so it sort of automatically delists, I suppose. Yes. Yowie. I don't remember seeing any of the Yowie chocolates in the supermarket. I remember seeing them for a while, but not anymore. Yowie bid update. Yowie takeover successfully closes. There you go. So Yowie won't be on the ASX much longer. It seems like. I could be wrong, but it seems like that, just based off that one announcement. So thank you, Daisuke ZZ. Finally, we'll just have a look at the chart for Yowie, by the way. It still looks like it's trading, maybe? Don't know why it'd be trading. 28th of June, yeah, still trading, even though, but the chart looks pretty ugly. The long-term chart looks really ugly. There was a bit of excitement in this company. I still remember that. back in 2015. Share price got to $1.30. Now it's 2.7 cents. Yeah, there was excitement in this company back yet. I didn't realize it was like 10 years ago. Wow. Time sure does fly. Method 341 asks, hey mate, do you know how to get percentages of ASX stocks above 200-day moving average or some sort of breadth measure? No, I do not know how to do this. The only way I do know it is through a screener. You could do it that way, but not a breadth measure. I should look for that. Let's have a look if there's any breadth measures. You could actually do this. Breadth. Here we go. Breadth percentage above MA. There we go. What? I don't know. You'd have to look at this. Oh, that's the S&P 500. So let's have a look. Breadth percentage above MA. So you probably have to go to the settings, imports, S&P 500. So you can change the exchange. Unfortunately, not all the exchanges are on this. Looks like only American. And then also the interval. So 50. Okay. And looks like 50% above, 50% below. This actually could be a fairly good indicator. So is there any other breadths? There's breadths. There's quite a few breadths one here. There you go. Yeah, have a look at that. Go into Trading View, in indicators, just search for breadth. And I'm pretty sure you could find one. It's actually a good idea. It's a pretty good idea, isn't it? I think. And the other way was just to do a screener, but I think the breadth would have a bit much easier, I think, breadth. So have a look at the breadth. And maybe if you don't find one for the ASX, maybe you could make your own one. So have a look at that other one I showed you first. Have a look at the script, and maybe you can make your own. And maybe you can share that with us. Dredge NZ. Oh, Dredge. Are you from New Zealand, Dredge? Because you got NZ there. Thank you for another great market insight. I appreciate the time and effort you put into on a daily basis. I thought Lindsay share price was going to perform better. Very disappointed. Okay, let's have a look at Lindsay. So Lindsay was a bit of a market darling a few years ago, wasn't it? Sometimes market darlings lose their darlingness, lose their shine. And oh yeah, the chart. This is the weekly chart, and China has definitely fallen for Lindsay. Share price has fallen about 30, we'll say $1.40 to 88 cents. So what's that? 60, not quite 50%. So I'll say about 40 to 45%. I'm going to get rid of these breadth. Remove. So you can see where this was a market darling for about 2 years, from 2021 through to 2023. Someone did tell me that one of their competitors, that was Queensland, went bankrupt, and Lindsay Australia really benefited from that. And maybe those benefits have come to an end, because you would think there would be more competition coming into the space, I would assume. Depends on how hard it is get into this space, this logistics space, but I didn't think it would be that hard. But definitely the shine has come off Lindsay Australia. I wouldn't necessarily classify this company as high quality. So high quality company, I would trade it more often than not, and I would call this not a buy. So just looking at this daily chart, this is definitely not a buy. In fact, the share price has started or has moved into a downtrend. In fact, it moved into a downtrend probably in April after going sideways for a few months. So this is, in fact, not looking good for Lindsay Australia. Yes, that I can understand why you're disappointed just by looking at that chart. Thank you, Dredge New Zealand or NZ. REM, 1 million in contracts past week for circa 4 million market cap company. I remember talking about REM, but it's gone off my radar. So let's have a look at our Remsense technologies. And I can see why it's gone off my radar just by the chart. So they had a really good day on the 7th of June. So I'm pretty sure this was 11th of June. So just after that. and the share price just after you wrote that comment had just gone sideways. Was the 10th of June a holiday? Must have been a holiday. So this was the trading day after they released that announcement. And you can just see the share price rallied that day. This is great. You just see how technical analysis works here. So on that day, Remsense share price went to a high of 4 cents. Opened at 2.6, went to a high of 4, closed at 2.3, which was the low of the day. That's bearish. So even though the share price did rise, did it rise? In fact, it didn't even rise. It actually was flat. So share price at one point in the day almost doubled, and the share price pulled back because of a lot of selling. And since then, the share price has fallen even further down to 1.8 cents. So I can definitely see why this company has not come back onto my radar, because the chart looks pretty negative at this point in time. At least the share price will be going sideways from here. So even though there was some good volume, doesn't matter. So yeah, the market cap of the company is small, but it needs more than just this $1 million in contracts. It needs a little bit more for the market to get excited about the company. So we just want a little bit more for Remsense. So thank you, About HQ. Stuart Percival says, nice. Again, Kneppy. We have Kneppy, Kneppy. Lots of variations. David Giblet again. China said they were going to put pause on buying gold. I'm going to have to trust you on that one. I've just been hearing that a lot of governments or central banks have been buying lots of gold. I've heard that. Is that true? Let's Google it. Or maybe I should do a chat GPT. Or what's the other one? Are central banks buying gold? Truth or lies? When central banks buy gold, no, sorry. Why are banks buying gold now? 7th of March. China, Germany, and Turkey have increased their gold holdings the most. In January, central banks have been buying gold at a record pace. And nothing on, what about China? China paused buying gold. When was this? Give me a date. Ugh. According to Business Insider, I don't know the date though, I think this is recently, China's central bank has paused gold buying after prices reached record highs. There you go. This was in 7th of June, not that long ago. China's central bank paused gold purchases in May. So, David Giblet seems to be right. Jeffrey Brooks says, good as always. Cheers. You're welcome, Jeffrey. Darren, wonder how long it will take before you realize mining companies are capital killers. Your best results have been non-mining companies. It's time to take the next step forward, and you know it. Wow, I like this. Certainty that mining companies, yeah, they are. There is some element of truth to this. Mining companies are capital killers. I've already mentioned that I am being more picky when it comes to mining companies, but I have had some really good results with mining companies. Some stellar results with mining companies. And that's why I want to be a little bit more picky, because I was a little bit more picky when I had those really good results. And I think you can do really well if you are picky and can time the mining cycle. If you can time the mining cycle, you can do really well. I do like to be a little bit more open-minded and just completely rule out buying or trading mining companies. And I think I'm about 67% profits for the year trading. I will take 67% every single year. So I'm not going to complain about my results. Now, I have made mistakes. Sure, I have made mistakes and I can learn, but the whole point of making mistakes is to learn from those mistakes to become better. So thank you for your feedback, Darren. But there is some truth to what you say. Some truth, not complete truth. Funny enough, my best result was a Pearl company, and that's a quasi mining company. It's a commodity company. So that was my best trading result. A pearl company, which is like a quasi mining company. So, yeah, that's right. Yes. Now, Atlas Pearls was my best trade of the year. That's right. And it was only was a 5-month trade? Yeah. Was it 300% or something? Yeah. Nice says, Race Oncology was very popular in 2021. Now looks like coming back. Will be good to get a review. I don't know. Race Oncology. I'm trying to remember what this company does again. Well, Oncology. Is it breast cancer? Was it breast cancer something? 2021. Oh, yeah, look at that. 2022. Oh, yeah, you're absolutely right. That's a stellar chart. So you can just see that I wasn't trading charts. I wasn't looking at charts that much back here because, yeah, I did not know this was a, yeah. So breakout happened late 2019 at about 12 to 16 cents, went to a high of $4.20, and share price then went sideways. So this is one of those you sometimes see these sort of charts of share prices going up, going sideways, then going down. And possibly this is the start of the next upwards move for Race Oncology. Share price right now is $1.82.5. What does this company do again? Well, oncology, it's cancer, isn't it? Oh, RC22, bisantrene, yes. That's right, Dave. Yeah, FDA. It's clinical stage, heart of cancer care, lead acid bisantrene, molecule, chemotherapeutic. Yeah, okay. Again, not much research in this company about what they do. It's just the chart. The chart looks pretty good. Still looks pretty good. Yeah, no complaints about that chart for Race Oncology. And I'm timing this. I've got 8 minutes to go. Method 341 says only newbies rely on RSI. Real traders use moving averages. Does that mean I'm a real trader? Because I use moving averages. I actually come to the realization that I don't really need RSI. Like Race Oncology, I wouldn't say it's overbought right now, but if you just put RSI in, it's towards the top. Maybe it's a little bit lower than the top because it has pulled back a little bit. But if I look at this, I would have said oversold overbought right here. So so it's not hard to really know when a company is overbought or oversold, just by looking at the chart, just by looking at how quick the movement has been. Anyway, so I don't use RSI all that often. It just sometimes verifies what I'm thinking. And I would never, put RSI on. So, anyway. Not sure about I did actually read or listen to this guy who's been trading for many, many years, and he scoffed at using moving averages when he started trading, and now all he uses is moving averages. And some people have said, "Oh, you shouldn't use moving averages; they're backwards looking, or they're too lagging." But for me, it's just simple and it works. It gives you exactly what you want. That's why I love moving averages. I understand them much more. Managing director says, "Can you update Findi? Should this be the last one, or maybe Codan? Maybe I can do a few more." Findi, what sort of update do you want? Everything's moving in the right direction for Findi. Let's just do a chart, I suppose. There's nothing to complain about Findi. Look at the chart. What can you say? Remember when I said I could just look at the chart and say whether a company is a buy, or I wouldn't say sell, but not a buy. This is definitely not a sell. You could take profits, I suppose. One thing I am trying to work a bit more on, and this is another thing I've heard, don't buy a company whose share price is well above the 50-day moving average. So this would be down about $3.60. So Findi share price right now is well above the 50-day moving average. Don't know if I'd believe that. I'd probably use maybe the 25 moving average or this green shaded area. That's what I like to use. That's when I see the share price pull back into that zone, that could be a time to get interested in buying a company or adding to your position. That's what I'm using to try to add to my position when the share price pulls back into that zone. It's done a few times for Findi, and right now the share price is well above that zone. So at this point in time, I would not add to my position in Findi. That's just me. The share price has gone a bit of a run the last 2 weeks, hasn't it? So that's Findi. Otherwise, everything's moving in the right direction when it comes to the company. Now, even though I do own this company, I don't really look. Oh, they did an investor presentation. Or they released an annual report. I had no idea they released all this information and during June because none of this was marked price sensitive. So it wouldn't have come up on my radar. So I actually will look at that annual report, look at this investor presentation. They've released 2 in the past month. So they're getting the name out there. They are definitely getting the name out there, Findi. And the chart is just a beautiful looking chart. And that's what I'm going to talk about when it comes to Findi. If you want more information, just leave that information in the comment section of this video. Codan had a breakout grade. Okay, now I know where that comes from. Share price of Codan the other day, maybe the other week, increased in one day. It was 7% in one day. I think it was the 13th of June. And this chart looks really good as well. I was trading this company and then I took profits. Why did I take profits? This was me selling out a little bit too quick. And that's one thing I want to limit. Why there was no need for me to take profits in Codan at all. This is a great looking chart. This is a brilliant looking chart. So where would you have bought shares in this company? I can't remember when I bought. I think it was on this breakout here. So yeah. In fact, I'm going to MA cross. I'm just going to put this in 15,200. Just want to see when it would have crossed this. So I have been looking at this recently and I do like it. We'll do cross and we'll do it black. So this is interesting. So I've been looking at this, comparing all the companies I'm trading. So Codan had that 50 and 200 moving average cross just after I bought it. So I bought it just before it crossed. So my timing was fairly similar, but since then there's been no cross, so no reason to sell. So this is something I have been testing recently, and I actually do like this cross, 50 and 200 cross. Sometimes it would have got me early into trade, sometimes a little bit later into trade. So it's interesting that my timing is not as bad as I think, but I think it would have got me into trades a little bit earlier than later, based off some of the companies I am trading now. So let's go have a look. So COSOL. So there's me buying at 96.5, and the crossover was well before I bought. We're talking about months. And yeah, it's been trending up ever since then. So Shape Australia, the cross was a few months before I bought. Yeah, about 3 or 4 months before I bought. Superloop, the cross. And you notice when the share price goes sideways, you get a lot of false crosses. So you get a few crosses. So I think the timing here, so I don't think I would have bought on this cross in January. So this is when I probably wouldn't have bought. But after that, share price was trending up. But it was trending up also in September. And then I bought on this breakout here. So my time was a little bit out there, but I'm okay with that one because that was a signal, in my opinion. It wasn't a cross. The breakout was a signal. Life 360, definitely a little bit. No, the cross was here. A few days after I bought on a breakout. Tours definitely got into this one way late. So I bought 380. Could have bought, this was a nice signal. This is a beautiful signal. But yeah, I think based off what I'm doing now, I definitely could have seen buying Tours back here in May of 2023. And last one is Fisher and Paykel. I won't go through any of the others. And this crossover, I don't know if I would have bought this one. It's not quite as obvious as some other ones. and I bought on the breakout here, and this one's looking good now. Okay, so thank you. Yeah, so thank you for that, Matt, for reminding me that I sold Codan a little bit too quickly, but we can learn from our mistakes. And I've been recording this video for now, so I'm going to keep it there, leave it there for now. And in my next answer and reply video, I'm going to be talking about method 341, talking about MMA Offshore. They did the dirty on that company, and I won't get into detail. So I am now still 16 days behind. Sheesh. Okay. Last thing I should mention is I'm not a financial advisor. If you do need financial advice, make sure you seek. If you do need financial advice, make sure you seek someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day.